Hey there traders, welcome back for episode number 96 from the StockBandit.tv. I'm always glad that you made it, and I definitely hope that your weekend's been great and you've had some time to review the charts and start formulating your game plan for the trading week ahead. So in this video, what we're going to do, as we always do on Sundays here, is take a look at the major averages. We're going to work through the NASDAQ, S&P, and Dow, eyeball some important levels, some key levels to be keeping an eye on in the days ahead. And then, of course, we know as individual traders that's going to then influence the individual stocks that we're likely to trade. So we're going to work through each one of these, starting off with the NASDAQ. Now, last week and just lately, for that matter, we've seen really light volume. Take a look at how few days we've had just in the month of August above this gold 21-day moving average. So the Friday before was option expiration, and then of course Friday of last week. Those are the two best volume days that we've had lately, which is a little bit odd for summer Fridays, especially a late summer Friday, but we've had the best two volume days lately, both on Fridays. So last week, after finishing the previous Friday right here above this 2015 level, the NASDAQ made attempts to move in both directions. On the downside here on Thursday, we were able to quickly recover, and then we made an attempt at the upside on Friday, and then of course quickly sold right back off. And so for the NASDAQ, this is now 6 days in a row this index is closed between 2017 and 2028. So very narrow closing range here. And in fact, let me just do one thing here. Let me shift over to a line chart. You'll see exactly the kind of flat action that I'm talking about. This is only going to mark the closing basis for this index, and this is a really dead period here on a closing basis. So heading back to the HLC bar chart, which is the one I really prefer, here's what we've got to take a look at. Obviously last week's high at the 2060 level, if we get back over that, this index is able to run higher. If we do succumb to this key level right here, which is the 2015 zone, we close back under that, then I think this index can easily head back down and challenge this 1929 level, which is the August low at this point. For the S&P 500, here again, very similar, quiet price action, very light volume in general, save for a couple of spikes on the upside. We've got this 978 level down here, which is the August low. The 1018 level was the previous high. It's now serving as some support here. We dipped in and tested that on Thursday. Thursday's low at 1016. So essentially we tagged that 1018 level. And here again, we've been in a very quiet closing trading range here for the S&P. 1025 at the lowest, 1031 at the highest. So it's just about a 6-point closing range here over the past 6 days. If we can get over last week's high at 1039 and really punch through the 1040 zone, this index is free to climb higher. But if we get a good solid close back under that 1018 area right in there, then this thing is likely to head back down and challenge that 978 zone. For the Dow, by the way, the S&P 500, zooming out here on the chart, this 1100 area is the area I would look to see challenged next on the upside if we do see momentum return. Okay, so keep an eye out for that. For the Dow, this index holding above the previous trading range. If I just extend this line here, that's right up here at this 94.37 mark. So that's serving as some support right now, and then of course below that 91.25 was resistance and support in just the past few weeks. So those are the levels to keep an eye on the downside. If we undercut 94.37 on a closing basis, expect to see 91.25 pretty quickly. Instead, if we're able to take out last week's highs and show some momentum again and clear the 96.30 level, this index is able to climb once again and start stretching its legs once more. But for now, here again, the Dow in an incredibly tight range here on a closing basis over the past 6 days. That represents a 75-point closing basis. So that's extremely narrow, especially when you consider the fact that we're 1,500 points off of the July low. Okay, just to keep things in perspective here. All right. As always, thank you for joining me for another episode. I will be back soon with more videos, but in the meantime, trade like a bandit.